Are you new to investing in stocks? Or perhaps you've never done it before. You probably feel like it's confusing, you need to be highly educated, it costs too much money, or maybe you just don't have much money to start investing in the first place. Here's the truth. It's really not confusing. You don't need to be highly educated, it doesn't cost money, and you don't need a lot of money to start. Basically, you don't have to be an expert to invest in stocks. Seriously. Hey guys, it's Cameron from themoneyventure.com. Today we're going to prove to you how you don't have to be an expert to invest in the stock market. When most people think investing, they think ratios, price charts, financial statements, math equations, and risky business. First, forget all that. That may have been true prior to the 90s or the 21st century, but not anymore. Here's what investing is in a nutshell. Companies issue ownership of their business, called shares of stock, in exchange for your money. They use this money to grow their business. When you purchase shares of a company, you own that company and thus participate in that company's growth. If that company keeps growing, the price of the shares you own increases and you benefit with more money if you sell those shares of stock. Shares of a company can be bought and sold on the stock market. Much like Amazon is a marketplace for everyday goods, the stock market is a marketplace where stocks can be bought and sold. That's it. Nowadays, people can invest in the stock market in a passive manner. Rather than buying individual shares of a handful of companies, which can take time, you can buy one share of a fund that includes hundreds of companies. This is called passive investing. It's a true set-it-and-forget-it approach to investing in stocks. But what is a fund? A fund is a basket of hundreds of companies. Perhaps you just want to own a piece of 500 of the largest companies in the US. You can do this by purchasing a fund that includes these companies, called the S&P 500 Index Fund. The S&P 500 Index Fund represents the whole US stock market because the 500 companies found within this fund represent the majority of the US stock market economy. Next, just let that sit and grow. But why would you invest in a fund of 500 companies? First, it's less risky. Second, you're diversified by nature. And third, the stock market averages 7 to 9% annually on return on investment. Investing in this fund would give you the same average return of 7 to 9% annually. No research, no worry, just set it and forget it. You might be worried about the fees associated with investing in the stock market. That's no longer an issue. Where before, investing required trading commissions. Now, most companies charge zero trading commissions at all. Before, funds charged heavy management fees as well. But now, companies have zero cost funds, which means they're completely free. If you're concerned about costs, you've got nothing to worry about. But doesn't investing require a lot of money to start? Nope. Next question? Just kidding. I'll provide further explanation. Before, investment funds required a minimum investment amount. But now, funds can be purchased with zero minimum investment requirement. Before, companies had to be purchased in whole share amounts. Amazon, for example, would be thousands of dollars for one share. Now, you can buy any company with as little as $1, regardless of the share price. Before, investment accounts required minimum opening deposits. But now, most investment accounts have no minimum opening deposits at all. So, does investing require a lot of money to start? Absolutely not. Myths debunked. All you need to know to get started investing has already been said in this video. Here's a summary. When you buy shares of a company, you're giving them your money to own a portion of that company. When these companies grow, your money grows with it. You can invest passively in the entire stock market by putting your money in an index fund like the S&P 500. The S&P 500 represents the majority of the US stock market economically and grows on average about 7 to 9% annually. It no longer costs money to invest, no minimum balances, and no minimum opening deposits. So how do you get started? First, you got to open a brokerage account. Most companies have step-by-step instructions to start. We recommend one of these: Robinhood, Acorns, M1 Finance, or Fidelity. Next, you got to link your bank account or your debit card to transfer money so you can start investing. Next, purchase your first company or fund. Here's what we recommend. If you're just beginning, we recommend that you start purchasing a fund first. Consider one of these funds to start. The Vanguard S&P 500 Index Fund, which consists of 500 of the largest companies that trade in the US stock market, and is the one that we talked about earlier in this video. The Vanguard Total Stock Market Index Fund, which consists of over 3,000 companies in the US, and the Vanguard Russell 2000 Index Fund, which consists of over 1,900 companies that are smaller in size, usually $2 billion or less. Want to learn more? Take a look at our featured course called You Don't Have to Be an Expert to Invest in Stocks. You can view it by going to themoneyventure.com/beginner-investing-course. If you found this video helpful, please give us a thumbs up located just below the video. Don't forget to subscribe to our YouTube channel by clicking the subscribe button below to be the first ones notified about our latest content.